with your thoughts on market sentiment.
Sure thing. It's Tuesday night, Taco Tuesday exclusive. I know you were talking about tacos earlier. Um, yeah, who
I
broke the
loaded up.
market? Raise your hands. Who broke the market? It's okay. We won't beat you up too badly. Yeah, listen, it's 2 days into the new year, right? It's 2 days into the week. It's not a bad place to be. I mean, we got to expect some volatility after the new year. That's what we're seeing. Seeing some heavy rotation, some nice fake outs in tech to the upside, nice reversals to the downside. It's par for the course. This is basically what we've been seeing for the last couple of months. No one should be surprised. I hope you didn't think it was bull market on as soon as January 2nd bell rings. So, we SPY coming into some fib levels, QQQ failing at 400. But you know what? To quote somebody who I really cringe when I quote him, but there's always a bull market somewhere, and we'll get into some names later that are showing some really really nice relative strength. But listen, it's just the name of the game is patience. We just have to be patient. It's not going to be 2020. 2022 is going to be its own year, and it's going to take a little while for us to get into the weeds of things and see who are the true market leaders going to be. We're not going to know that on day one. We're not going to know that on day 10. So let's just give ourselves a deep breath. Yes, big tech got sold off. I think we need to get used to that. Growth sold off. Got to get used to that. I think we should be already numb to that kind of pain and start looking at some of the names that maybe they're not so sexy. The Fords of the world, which had an amazing day today, and it's not a name that most people really would equate. Wouldn't put it into the world of the Teslas. So I think this year is going to be really interesting. I think there's going to be a lot of opportunities, and I'm excited. So really excited to hear what everybody else says. This is always going to be my favorite space of the week, Tuesday nights, 8 p.m. with a lot of my friends up here. So really interested to see what everybody else has to say. But I'm excited. I'm still day trading. I'm not swing trading. I'm not holding anything too long. The only thing I'm holding overnight is going to be roll-ups that are purely profit. Not necessarily looking to expose myself until I start understanding what is where the strength is going to be and what my next moves are gonna be in the market.
Very well said, Danny. Hit on every single major point there. That was awesome. And I agree with you. It is also my favorite space of the week. This one is so cool. There's so many good ones, but I feel like this one has ambiance to it. This one and the Monday morning one where we have that's energy and ambiance. Okay. With that being said, gonna keep it rolling over to the next. And as you're listening, if you hear someone speaking while they're speaking, if you're relating to what they're saying, if you're learning something from it, I highly recommend just clicking into their profile, taking a look at who they are, what they do, scrolling through some of their tweets. If you're on here with us anyways, and definitely throwing them all a follow because I'm following all of them. 100% vouch. They are amazing. With that being said, let's keep it rolling. Actually, exclusive. It's really a pleasure to have you on after a couple weeks. We were missing you. Would love to have you go next.
Yeah, absolutely, man. It's good to be back. 2021 is, or as Biden would call it, 2020 is back in the rearview mirror. So we're moving forward and we're pushing on. So spreading love, positivity, good vibes, and profitable trades. So that's the name of the game for 2022. Yeah, so people were asking me about, what do I think about where the market's at right now as far as volume, names, sectors, this and that, this and that. And I like to think of it as, like Danny was saying, you can't compare any year to any other year in the market, other than, what you're specifically looking at price action wise in these indices and ETFs and individual names. You really need to focus on the fact that the market is currently in what I like to call cruise control mode. They're not necessarily slamming on the brakes, they're not necessarily slamming on the gas. It's just kind of in a lull phase, and the volume kind of indicates that people are waiting for the bigger move in either direction. I think it's going to go up before it goes down because that's just what everything indicates. But again, that's just my opinion. I'm sure there's a million people that are bearish and there's a million people that are bullish. So, I'm just going to go off of what's currently happening, and I'm not going to assume, either direction until it actually happens. And I'm not just talking about a 5-10 point move in the Qs or in the SPY or IWM. It's going to be a matter of what's everything doing as a whole. And, when those directions are being made in either direction, what names are moving against that trend. So if the markets are pulling down, what's going up? If the markets are going nowhere but up, what's falling back. So, these inverse plays can kind of be, it's a little bit more different than what I've usually done in the past, but it's kind of caught on more to where you can kind of scalp these inverse plays and make some money while they're down and then they bounce, or vice versa. So, market wise, that's where I think things are potentially going to go. I think they're going to go up before they go down to make that major pullback. And I'm still going to be in defense mode. Normally I'm not as defensive in the beginning of the month, but, Mondays, you typically have that gap up Monday, you have that pullback. So, I made plenty of money yesterday, made plenty of money today. So 2022 is already off to a great start. And, it's going to be a matter of being patient, and not forcing anything and being prepared for a move in either direction. So, that's what I'm thinking short term. Long term, the market's designed to take money from the impatient and give it to the patient. And companies that are listed on the Nasdaq and the S&P are designed to make profit and not lose it. So long term, things are going to continue moving up. Short term, we'll have a pull up and a pull back, and then I'll just be ready for either direction. So that's my opinion.
What a freaking quote. The market is designed to take money from the impatient and give it to the patient. That's crazy. I've never heard that before.
That's
Love that
Buffett,
release.
man.
Yeah, it's Warren Buffett,
Uh,
man.
I had not. That's awesome. I love learning new quotes, especially in these.
I spell
Um,
patient with a different letter. I put a Y instead of a T. I mean, yeah, a Y instead of a T. So
Mixed it up a little. Definitely. Yeah, and I agree with you. It's definitely especially with, the style of investing. And mind you, when you're listening, different investors up here have very different styles, sometimes targeting, momentum versus volume versus specific areas of the market. So you may just want to kind of, get to know them also as well so you understand what they are attacking this with. Also, Nick, please drop stock market news a co-host invite. Thank you. Okay, Mel, would you like to go next?
Sure, it's been interesting. Indeed, there have been the moves with or without the volume. Last week was definitely frustrating, although there was opportunities for trades, just didn't really have a lot of the follow through in the afternoon sessions, and we're starting to see a little bit of an uptick. Glad that we have some volume to kind of come in and support these moves. Um, from a money flow perspective, just to kind of highlight and add to some of the conversation we had last week, we were talking about some positioning in the TQQQ options flow that was shorter dated, but longer dated TECL, which is 3 times leveraged bull tech that was positioning Jan 21, which gave us kind of that a little bit longer outside of the initial shorter term. And I think we may see that. That's something we touched on, several of us noting that there may be some that comes off a little bit of some of the bigger tech names that have ran, and seeing some of the value names starting to come into play and gain some traction and some interest. Just worth noting, a little bit of volatility started to show up. We haven't seen that in recent weeks. The VXX with 3.29 million share dark pool print yesterday at 1801, and we've had a little bit more activity today. So that's not, that larger trade's not something that we tend to see. So when we do see it, I do like to pay attention, because we may see a little trickle in here and there, 100,000, 200,000, but not necessarily that size. And last time we had that size, we did have a little bit of a pullback. Did like the rebound in SPY. I think the Qs today took the biggest hit. Um, Worth noting some after hours activity in SPY, 9.51 million shares at 477.52. So it's definitely a larger level that I'll be watching going into the rest of this week, just to see if we can maintain price action above. Not seeing the same thing in the Qs, more concentrated with the larger activity there in the SPY.
What's been the most surprising thing that's shown up on the flow so far this week?
I would say the most surprising thing is the rolls. So where you've had some bigger positioning, where you've had that multi-million-dollar flow show up in individual names, which is really, interesting and compelling when it comes through, that they've kind of are losing and then rolling down. So they're taking the loss, closing that out, but rolling into a closer dated strike. We've seen that a lot these last few days, and it's one of those things that if you're an individual investor, following money flow, that's not necessarily a trade that you can manage in the same way if you're managing billions of dollars. I'm sure that they're also hedged in different various aspects, whether it be with the same individual ticker, running spreads, shorting individual stock. There's so many ways to approach that, that it's important that if you have a trade set up and technically it breaks your level, get out and reassess. You're not going to be able to manage that kind of bigger trade the same way a bigger firm is going to be able to, by adding different legs to cover that interest, so short positions in various ways. If they're rolling down, which they have been, they've taken the loss and adding more and then rolling down again. We've seen it in a few names. It doesn't mean the individual investor can necessarily copy that same structure and that same trade to stay profitable. If it ends up breaking a level, get out, reassess. There's some names that are definitely taking some bigger hits, are growth names, software names. That's not something you just want to stay, attached to when you've got some other stuff that you could be putting capital to work.
Well said. Thank you. Yeah, I'm excited to hear from later in the night more of this stuff. So real quick, Danny and Mel, is it okay? I typically during some of these, I'll throw out a post and ask people to drop tickers. We'll get some analysis and maybe, Andrew, whoever else wants to weigh in with some charting. Are y'all okay with that? Any emotes? Perfect. Okay. All right. I will put that out and tag some of my speakers if people want to drop tickers so we can get some involvement from the audience here. All right. Let's keep it rolling. Okay. Guest that is back again. Story Trading. It was good to have you on last week, and would love to hear from you on your thoughts on market sentiment.
Hey, Gav, it was good to be here last week. Glad to be back. So I'm not terribly surprised at what happened, but I am surprised how soon it happened. I've been, along with many people in our community, we gave out the warning. We're pretty on top of the growth stocks back in late November crashing. I was personally hedged throughout the entire month of December. But I closed out all of my hedges at the end of the last week because of how well the last week of December did, and I thought we were going to have an awesome January effect. So I was completely unhedged. I said, you know what? Let me make a ton of money on these January effect picks the first 1 or 2 weeks of the year. The first 1 or 2 weeks of the year. And then I was going to be very cautious to take my profits, get back into a cash and hedge position, because I did predict that this was going to continue. Like when you have interest rates starting to go up and we're entering a new cycle, it's not like a one blip thing. It's not like, oh, we mentioned higher interest rates in November, December, and it's done. This is an inflection point, and it's a longer term thing that's going to be happening. So I anticipated we were going to have more pain in growth stocks. But again, it totally blindsided me how quickly it turned from yesterday to today. I thought they'd give us a 1 or 2 week honeymoon. So I was caught a little bit off guard there. Looking at, I look at different indices and ETFs and compare it to look for correlations with a lot of my stocks. And I find time after time again that there's a huge correlation with ARK, like ARKK. It seems to be the best indicator of how what I call risk assets do. And that's not just growth stocks, but even like micro caps and unprofitable companies, any speculative companies just based on sentiment, biotechs like the IBB, but again, that RK is such a great indicator for whatever reason. I feel like a lot of maybe algos linked to RK and start taking these stocks down. So when I look at RK, we're way below all those key moving averages on the daily chart. So I like to then go to the weekly charts. 200. If you look at the 200-week moving average on RK, it's about $75. I wouldn't be surprised to see that happen. I was kind of expecting a move down later in the middle to later January for that to happen, and that's like another 19% down from here. Like I don't know how we get there. Do we go up first? Do we go down? But I do understand the move out of growth stocks and into value. It makes sense. This always happens when interest rates go up. So, yeah, not surprised. A little bit surprised at the timing and how fast it happened. I guess there's something in the bond market that sparked that to happen. Despite that, there's a bunch of trades that were still working for us. We had really great trades on Friday. Monday was fun. I know a lot of people had fun with Tesla. I made a lot of money on GNPX on Monday. But even today, there were a number of these quote unquote January effect trades that continued to do well. It really has to do with whether, we look at the four pillars. We look at sentiment, technicals, catalysts, and fundamentals. So if there's something else there, right? If you don't have catalysts or fundamentals or something to pair on top of the technicals, you're out of luck. Like a lot of charts looked like they were about ready to break out yesterday at 20, 50-day moving averages, and it just all rolled over. But the ones that had a catalyst behind it, or an upcoming catalyst, or something like that, continued to do well today. So there were some bright spots, and we can get to those a bit later.
Like that. I like the four pillars. That definitely makes sense to me, especially in this market. Having a catalyst never hurts, and can really, really help. Okay.
Gav, can I just jump in? Yes,
Yep.
Because I just want to, and everybody should applaud Ben, Story Trading. These are the conversations that you want to have with real traders. You thought something was going to happen and it didn't, and you had to pivot. You're not sticking with that and staying with a trade that is working against you. And Ben, I appreciate your approach and coming on and sharing that. I know a lot of us have sentiments that will change as new information comes in. And I appreciate you taking that and sharing that, because that's something we all need to be doing. We could have a great setup, a great thesis, everything that we look at to support that. And then something pivot, new data comes in, something shifts, and we have to pivot. And that's okay. And so I just want to applaud that and really point that out and recognize that. That's when you know you're talking to an honest, real trader, because new information comes in that we're constantly fighting, that's going to take us and make us look at where we have to go technically a different way, money flow different, whatever we're using. We're constantly just reassessing that data. And that's just something I think is so important to highlight, and have a lot of respect for you coming, and sharing that. Just felt that was worth highlighting. So appreciate you for that.
Thank you so much. I appreciate that. Yeah, you got to be dynamic in this and reassess the information every day, like especially if you're trading. We're all here to trade and outperform. Otherwise, we'd all be in SPY and QQQ and call it a day. So we're all in there choosing individual names. We have our theses, and it's a very dynamic market. You got to reassess as new information comes in.
Well said by each of you. Great points all around. I think we're going to talk about tonight. It'll be interesting once we get to the stock picking section to talk about how people are adapting. I'm interested to see if we get some different type of names. Also, I'm getting you back up exclusive. You just gotta. I don't have hope for Twitter Spaces at this point. You just gotta bite the bullet, get the iPhone. Unfortunately, I've been DMing. For anyone that's curious, I have been DMing with a couple people at Twitter Spaces, and Android, let's just put it, is not their priority. So. It kind of is what it is.
Hey, 3 trillion. Big shout out to Twitter.
Yeah. Hey, Twitter puts paying off if you've taken them this week.
Oh man, I've been
not financial advice.
Well, I've been pushing them puts.
Okay. Yeah, it's true. Okay, alrighty. Andrew, would you like to go next?
Yeah, sure. What's going on, everyone? Thanks for having me. Yeah, so heading into this year, in the last 2 weeks, the tempo and the pace of the market really declined, and we were seeing there wasn't much volume. And my mindset was, okay, we're really going to see the river card when the year turns over to 2022. So let's see what happens. And yeah, I was preparing, hey, maybe there's a January effect. Maybe some of these growth stocks will really bounce. But what we're seeing so far is pretty much this very violent rotation. And we're seeing the 10-year treasury yield really move out to the upside pretty quickly. So I watch on my screen the 10-year treasury futures every single day. And yesterday we just had a huge red candle. And today we got a little bit of follow through. So really what it looks like is, as other speakers have mentioned, everyone's getting ready for the Fed and they're getting ready for higher interest rates. And I think a new narrative that's being thrown into the mix is, this Omicron variant, we are finding out that it is less deadly. This could, in some way, shape, or form, end the pandemic as we know it. So I think that's a further accelerant on this rotation out of growth stocks and this idea that, oh, now with the pandemic, this could be over. Now we really need to get out of these, COVID winners, COVID stocks, whatever you want to call them. So pretty crazy that we've basically had our first vol event in the first 2 trading days of the year. Well, what's also interesting is that if you look at the S&P 500, you would never know it. So depending on like what your style is and what you trade, if you're talking to a value investor, it's like, oh yeah, this year is starting off great. We're in a bull market. If you're talking to a growth investor and that's their specialty, we're starting off in pretty much a bear market. But what I found interesting is that even though we were seeing I was seeing a bunch of names down 5%, 10% today, huge downdrafts. There's some other names that are acting really well, and I haven't seen this many good quality setups in a while. It's just not in the names, that most active investors on FinTwit are used to trafficking in. So yeah, that rotation has been pretty fierce the first couple days. What I am noticing though is like the TLT ETF, that's the long-term treasury ETF. We had a 3 standard deviation move to the downside, and some buyers did come in and prop it up into the close. So I think for anyone that's like, I was a bag holder in all these growth stocks, like it almost seems today like there's like some hedge fund or something that's literally like blowing up, or like growth stock investors that are literally like, meeting their maker today. So yeah, I see a lot of these names look very oversold. But when I really look at the best setups, they're in a lot of the value stocks. So what I've been doing really like the past week or two is I've been sort of barbelling my portfolio. Like I was more heavily tilted towards the growth names into the end of the year. And as I started to see some of these good setups in other areas, I was like, you know what, let me take a consumer staples stock, or let me take, this other group, or let me take some financials. So yeah, now I'm pretty much in a barbell and really just, I think we're all going to have to see what happens next. But in terms of the indices, my trend model is still at a +3. And on the individual stock level, I'm seeing a lot of good looking setups.
Sweet. I'm interested to hear what those setups are going to be. Again, it's really interesting that everybody has similar tone, I feel like, with this market, but I think there's going to be a lot of different approaches, personally, as people target different areas of it. Okay, Juicy, all you.
Hey guys, what's up everybody? Again, thanks for having me on. Just do a chart up there because again, guys, how I am talking about charts. I like to have the chart so people can see. And coming into this year, especially coming off that last year, I know I'm like a broken record. I'm still talking about the bounce from 451 to 477. But like we said, we're going to consolidate, and this is all this is. It's just consolidating. Now, yesterday, going into the day, we were thinking, me personally, I was bullish. We went outside here on SPY. I was looking for that high day breaking to send that going. But every time they gap the indices, oh man, it's just the price action is so frustrating, especially if you're a short-term trader and this is just part of the game. So right now, we're still stuck in this little bit of a range. We got above the 479, pulled right back in it. The lower side of the range is 473. And while we're in the middle of this range, expect chop and frustration. Me personally, I am off to a decent start on the year, the last 2 days. Today, I actually opened up with a loss on Amazon trying to take that trend break. But luckily for me, I was able to regroup, reassess. I made the money back on Tesla puts, and I rolled into more Tesla puts, and I rolled into more Tesla puts, and then I pretty much called it a day. But right now, what we're seeing is just that consolidation from that bigger move. And the longer we stay in this tight range, the bigger the move is going to be. So me personally, I still think we're going to break out probably about that 480 area and make the march to the Fibonacci 1618 at the 487 area. So I am bullish, but I still think right now You guys are going to see a lot of consolidations. I know a lot of people here are saying growth stocks, this stock. I'm such a short-term trader. I'm not even seeing it. All I'm seeing is the markets in the tech sector. I have never seen. Well, I don't say never. I haven't seen this in a long time. You look at QQQ. You went outside to the upside, and then today you go outside to the downside. That is just extreme indecision from the market. So for me, the way I'm approach this is one and done. Like I'm coming in very selective. Like I'm looking for everything that has to be there. Like everything has to be there like 2 times for me to pull the trigger. And when I'm up 20%, I'm cutting. I'm not trying to let winners run. I'm just trying to take profits and get defensive until we start breaking some upside levels, which is SPY 480. So my advice to you, if you're trading the short term, just play defense. And there's money to be made out there. We can talk about that later, but it's one and done until we get above 480.
All good points, and I'm glad that you brought up, playing the downside, which is completely fair in this market. And I know if Stock Talk Weekly was on here, he always has a like full put together spiel on, how you have to approach the market. I really like it, but essentially, you can play all sides of this, and you heard it. If the stock's breaking into a downtrend, especially if you're a technical trader, that sometimes can be a lot more enticing than trying to play around with something where you have no idea where it's going. It's in some neutral zone, and definitely potential better use of your money. Okay, awesome. Thank you, Juicy. All right, going to you, Vegas.
Hi, everyone. Hope you guys had a good New Year. And yeah, it's been an interesting couple days. I'll talk about some ideas later on. But, I was looking at these indices as well. I was a little disappointed with the SPY because I thought, SPY's going to break 480. I was ready. And I'm like, we're getting so close. I was like really ready to jump in that trade and go for a swing and go long on SPY. And then it kind of pulled back here, and it sounds crazy sometimes, when they say, we always talk about, wait for confirmation, wait for the trade to come to you. And so many times it's very tempting as a trader, you're like, oh, it's only 2 pennies off, like I'm going to just, I'll just go in there. And you know what? It really just does, it actually does pay to wait for the trade to come to you and get your confirmation, because had I have like jumped in on a SPY call, I would have been in the loss right now, because it obviously pulled back, several dollars, almost $3 from the high of day today. So, I'm really glad that I didn't actually go into the trade and waited for confirmation. Unfortunately, didn't get the confirmation, and we could see that, on the SPX, 4800's key break, and so we didn't get that. So I found it a bit in the chop zone for certain parts of the day. IWM looked really nice today when it broke that 226 level, and then it pulled back, but I'm, still not too, still watching the IWM. I'd like it to reclaim that level. And then Qs, disappointed with the Qs too, because I really was hoping to see, the Qs, it did break 402 and kind of tricked me, because I actually took some Q calls for a swing. And then obviously it's pulled back, and it's around that 395 level. So at one point I had some puts to hedge because it broke support under 396, and so I did take some Q puts as a day trade to kind of hedge the calls that I'm in. But a little frustrating, certain points throughout the day. But nevertheless, just try to focus on, what is running. And, like Juicy mentions, he likes to trade momentum. I love momentum trades as well. And, what is running and where's the money going, and kind of, taking a look at that. So look forward to sharing some money making flow ideas later on this evening, because there's some pretty good ones lined up and ready to go. So look forward to sharing that. But it's kind of waiting for confirmation now to see like which direction does the market want to go, because some things are kind of in limbo. They're just not really moving, and we need these indices to pick a path. But I'm still bullish currently on the SPY and the Qs and IW. I'm still waiting to see like what happens tomorrow.
Yeah, the Qs are super interesting. Looking at it right here, obviously we had this big down day today where we rejected back to around that 396.5 level, and now it's kind of sitting on that 50-day moving average just on that session chart. And there's also, for anyone that's looking at the Qs, there's a huge volume ledge right here. Pretty much appears to be going back to around early November, where you're just having a lot of consolidation here. So I think that's, for anyone that's listening and saying, hey, hearing people saying, hey, I wanted to pick a side, it's because it's basically just been traversing here for a couple of months. And now the moving averages have gone ahead and caught up, and other technicals kind of, pointing towards this hopeful upside. But if it breaks through them, then they can become resistance, unfortunately, above it instead of the support that we were looking for here. Okay, with that being said, going over to you, Blake.
Yeah, GM, what's going on, everybody? Thanks for having me on again, Gav. Pleasure to be up here with many of my friends. Good to see everybody. Welcome to 2022's trading, right? Those of you that have been following, you guys know that I took the last week off of 2021 and walked into 2022 in a 7-day uptrend. So I was actually long prior to taking that week off from the December 22nd close above the 10 SMA on both the NASDAQ and the SPY. So I'm more of a swing trader and very disciplined, similar to Juicy. And I'm very big into the indexes, and I focus a lot on relative strength. So I was long since the 22nd, walked into this uptrend, was up big, scaled, and then I got stopped out just because I didn't really like the way that we were trading. And I really wanted to try to hold for a longer swing. But with Q's price action today, I mentioned in my chat, I said, hey, pay very close attention to the Q's, because the S&P just gapped above all-time highs. And the last thing that we want to see is a gap to new all-time highs and then just selling off the whole day. And the SPY pretty much did that. And it started to gain some momentum towards the end of the day, but just the weight of the NASDAQ was definitely weighing on the market. So I'm going to post a chart after I'm done speaking of what I'm really looking at on the Qs, kind of like to what Juicy posted for the SPY. But for the Qs, we're just stuck. Like Xavier said, we're just stuck in between this range. And if you're trying to swing trade this market, it's going to be very, very difficult. Just because of where we are right now, like Mel was saying, waiting for confirmation and waiting till the stars align in order to get really long with size and time. I'm waiting. So right now my trades are going to be really, really short. I'm going to be trading off a 15 to 1 hour chart. So that's pretty much how I'm going to be approaching the market until we can get some more confirmation and some more momentum. I'm a big momentum trader. And when the NASDAQ leads, that's typically when the entire market has momentum. So I'm hoping that the NASDAQ can, bounce off this volume shelf and hold the 50 and get back above a key 404, 405 area. And if we can do that, I think it's clear skies ahead. And if that happens, then I'll be getting extremely long. But until then, I'm focused on relative strength. And it's the names that nobody really likes to hear about. It's always the boring names, right? So it's your banks and your energy. And I'll have some of those trade setups for later tonight.
Really interesting. Yeah, banks and energy. I like it. We're coming in hot. Okay, real quick to everybody, I went ahead and I posted up top, did this a little bit later than I said I was going to do it, but did it. A tweet just asking for people to drop some tickers for us to analyze, because you're about to hear from a slew of speakers after stock market news, of course, talks. You're going to hear from a slew of speakers that are going to always, just be throwing out names, but they may not hit on the ones that you specifically want. So you can still be involved with that just by going to the last thing that I've posted and just dropping a ticker on there. So it looks like we already have a few comments, and thank you to all the speakers that are helping out with that. Okay, in addition to that, if you haven't already, please just visit these speakers' profiles. You've heard from now. They are masters of technical analysis, option flow, fundamentals, catalysts, and so much more. Just an elite panel up here that we've been doing this together for months now. I think at least like 3 or 4 months. And they've come back every single week. So they're showing their consistency. They're transparent. No one better. All right, stock market news coming over to you for your thoughts on market sentiment, short and long term.
Yeah, hey, what's up, man? So starting out really short term, thinking this market is kind of exactly what we were in towards the end of last year. It feels like all the terms that you could use December 20th, whatever, it is exactly what you can use right now for where we're at. Even like I even looked to like how the market was acting around then. We were having green opens and then around 11 or whatever going to red. and having right closes, and then vice versa. And it's pretty much the same thing that happened today. So to me, we're still in that chop area, waiting for the market really to define what it's going to do. A lot of what you do in the short term is kind of wait and see and let the market tell you what it's going to do and what's going to happen. And for in that late December time, everyone was looking to the Christmas rally to kind of give us a direction, or the Santa Claus rally, sorry. But now it feels like we are kind of waiting for the January kind of bull market or whatever, really, for the market this year to define itself. I must sound like a broken record at this point, but just kind of how I've been talking that, this new year is really the same as last year. It's just a couple days. It takes a couple weeks for this market to really define itself. So I'm just really looking for that over this next month or so. Still bullish for the long term, as always. And I'm a long term investor that's looking to hold my positions for 10 plus years, which is difficult to kind of find those stocks in there. But just kind of with that, you kind of become an inherent bull in what you're doing, and I still think we're there. We might have some difficulty in certain areas, but I'm ready to hold through and dollar cost average into my names. But with that, I would love. We've been going for a while now. We got a bunch of people in here. First of all, I do just want to take a second and make sure that everyone is following all of our speakers up here. We have an amazing panel. I feel like we are missing one or two people from it right now, maybe exclusive, but make sure you're checking all of them out. Give every single one of them a follow. Check out the Gav account. He's the man behind Wolf Financial. He is getting close to 10K. Definitely worth the follow. And Gav, I do think we need a little bit of a calendar shout out.
Absolutely. Why not talk about the single best tool on Twitter for finding amazing Twitter Spaces? Essentially, we understand people out there are busy. You have lives right now. It's a night. You could be watching a game or out at a bar, but you chose to be on Twitter Spaces. So you probably want to be able to know when can I find the best Twitter Spaces. So myself, Stock Market News, of course, I run the Wolf account as well, and Stock Talk Weekly have teamed up on a free public Google Calendar. Essentially, every Sunday, or even sometimes now 2 weeks in advance, we'll put out all of the events with exact dates, times. You'll be able to see who's speaking on them. And then after the event's done, we'll stick recording in there too. This calendar is your one-stop shop for everything Spaces. And the best way to get on it, first off, it's free. Second, just DM either the Wolf account or Stock Market News or myself, any of the three of us up here that are hosting or co-hosting, and shoot us over your Gmail if possible, but we can do with other emails. But it's really easy with a Gmail. So I think that kind of covers most of it, but that calendar is growing. There's over 2,000 investors now on that, coming to these spaces with regularity. There are people with over 1 million followers, hedge fund managers, CEOs. It's a great time with that calendar. And if you don't like it, which by the way, you can just hide it and toggle it on and off. If you don't like it, you can unsubscribe and it doesn't even send us a message. No harm, no foul, but you'll probably love it. So DM us ASAP and we'll get you on there right away. Stock Market News, anything you want to add to that?
Yeah, no, I think you always do an amazing job with that. You're great at that pitch at this point. I really do think it's one of the best things that we've created. Twitter is very slow in adding features, and when you do 14 spaces every single week, it is impossible to know when they're all going to be and kind of be able to predict them and really get in there and see what you want to see. So the Spaces calendar is definitely the best thing we've created. We're trying to, me and Gav have been talking about this a lot. We're trying to always upgrade and improve it. And, getting on that calendar, I think in the future will really make it easier for you to view that content. Maybe not live as well, but also in video format after. Right now we do link the tweets with the recording to the email on the calendar. But we are looking to do a little bit more in the future. So right now it's great, and it's going to be getting only better. So make sure you are on that.
Perfect. Thank you, sir. Okay, we have come to the part of the show where we are going to go into stock picks. I'm going to do my best to keep track of these. If anybody in the audience wants to keep track of some of these, that would be awesome too. Also, big shout out to the Bullish Rippers account, which is up in the house right now. The Green Raccoon over here. Evan tweets from that account. You might be seeing me doing some spaces from that account in the coming weeks. So be on notice. Check out the Bullish Rippers account. Okay, with that being said, let's roll into some stock picking. Let's kick it off with Mel. Would you like to get us started?
Sure. Just catching up. Thank you, everyone, for adding some ideas for us to share some chart setups or money flow with. Appreciate the interaction, and we're trying to get to those as best as we can. I'm going to be talking about some money flow that we've seen come through in Lucid and Neo. Let me just try to get a chart up here real quick. Had this already plotted out. I usually don't go first. Sorry, as soon as you said individual names, I was trying to get this loaded up so we can share
Sorry
some
about that.
ideas. No, you're fine. You're fine. All right, here we go. So went ahead and posted a chart. So Lucid, a solid setup. So before we had delivery numbers on 12/17, we had 26 million shares. Very unusual dark pool activity in this name. While we may see some smaller lots come through, 100,000, 200,000, 300,000, when you get to see the bigger perspective and the bigger picture, 26 million shares into this name is the largest that we've ever seen from a money flow perspective. While we don't know if the dark pool is a buy or sell, we do know that institutions are active. The pricing level is at 40.01, so we'll just call it a straight 40. We had $1.05 billion into this name. And like the current price action, we're still holding around this level, and that's common. Just because you have larger dark pool activity does not mean that they're done either accumulating or distributing. But let's start to think like an institution. Are you looking to buy at highs? Or are you looking to buy when there's some activity that's coming in at a support level? Really important that you're taking a larger view, a larger perspective. Do really like this setup technically on the daily. We've got MACD that's starting to turn up. We're holding right here at the 50% fib retracement, and we are still trying to get over this larger dark pool level for LCID. We still very much have EV in play. Which also brings me to NEO. 12/21 saw 30.16 million dark pool shares at 30/16, 909 million in money flow. So another name that has been seeing some activity on this pullback, has not made the advancements that some of the other EV names have. I think that the catalyst was going to be the production numbers that came out. We've gotten those. So I think we start to see a little bit more into some of these underbelly names. Again, unusual dark pool activity. You don't typically see, first off, you don't see size like this when you start talking about even 5 million into an individual name is something that's, depending on that ticker's personality, you won't typically see. But these names in particular, you just don't see this kind of size. And that could be bigger hands trying to gobble up some shares. They tend to be our composite operator. They hold on to those. It doesn't mean that that's your, just you see that and you jump right in and that's your shorter term trade. But considering some of the activity that we've been seeing in the EV space, it's definitely going to be one where we have a lot of growth opportunity in the future. Otherwise, I'm also looking at EH, and this is going to be kind of my under the hood name. Kind of was looking at this as a January effects. This is EHang. This is a China name, so you've got a little bit of a higher risk here. Also within the EV space, they do drones as well as drone taxis in China. Lower average volume, so again, a little bit more thinly traded. Not seeing any money flow. This is more of a technical setup, sector setup. We've been seeing some more money flow into China names, KWeb, CQQQ, China Tech, just a lot more injecting in that space. So it's kind of some of the names that I'm looking at. There's definitely a lot of headline risk, and I know that's scary for a lot of people, but I do think it's worth noting that the Evergrande news that came in yesterday, it seemed like a lot of the Baba particularly was able to kind of shake that off pretty quickly and find and find a footing to where normally that one would have kind of continued to bleed off like it had in the past when we've had some negative headline news. But back to eHang, just a little bit about their float structure. So a smaller float with 24.5 million in the float, but with 20% short interest. And this is kind of why I like this as a January effects name. Essentially, you have such a small float, and that allows this ticker to move quickly when there's volume and momentum that starts to come in. Of course, you have to have that as a component to be able to have acceleration to the upside, but you have such a smaller float capacity here. And should we start to see some acceleration, you've got a lot of shorts that need to go ahead and make a decision as we start to break to higher levels. Like seeing the volume that came in, we had a pocket pivot today. And there's some catalysts on the horizon. So this week, they will be presenting at the Morgan Stanley China New Economy Summit that runs from Jan 5 to Jan 7. Next week, Needham Growth Conference, Jan 10 through Jan 13, and B of A, APAC, Auto EV and Industrial on Jan 13. So some potential to have a little bit more commentary come out from the company that could lead to some upside. If you do go back and historically look at this chart, this has been one that has ran as a January effects before. We had some bigger acceleration to the upside last year. So using that as a little bit of a historical reference, don't expect the same results this year, but do like getting an early entry as IV is low on options contracts. Not seeing any money flow quite yet, but should they start to come into here, we'll definitely see those come in and juice.
So it's a very interesting pick. And I've really only looked into eHang because I owned them at the time when they started crashing in February. And what made them crash was actually a short report right on February 16th that said, we are short eHang, and went over why they believed in their title headline. They said it's destined to crash and burn. Now, is this mostly based off of technicals, like seasonality and some other stuff? Is the fundamentals kind of factored into the eHang pick, or is it majority staying around from other stuff, or have things changed within the company?
No, I'm not fundamental. I don't dig into, all that stuff as much as kind of seeing an opportunity and running through some of the names. We were talking about that, I think, 2 spaces before. We were mentioning some activity, larger dark pool, and positioning in KWeb, FXI. Vegas also mentioned it on last spaces as well. And so I'm kind of trying to look at some of the names that aren't often as looked at. I'm also in WB. WB has had dark pool activity. Also another one that has a smaller float with a higher short interest, more of just a technical bottoming and just trying to catch a little bit of a move there. It's not something I'm looking to hold common shares in at this time. I am interested to see kind of what they come out with. I think that's fascinating to see where, we're driven with autonomous on the road and where you have company taking it to the next level, which you have to know is going to be the auto progression, for any of us to look at is, aviation. When you look at drone capabilities for healthcare needs, or even just, commuting, that's going to be on the horizon soon. I think they're a little bit ahead of, where we are and able to accept that, but hey, Jetsons did it.
Yeah. I mean, it's definitely an interesting company. I really was intrigued for sure. But maybe there is, opportunity. It's definitely come down a good amount. It tapped out at around 125, trading at 1665 now. So there's some gaps there.
Yeah, and I don't expect those same results. I think what happened, previously was definitely that momentum trade where you have extreme accelerations,
For sure.
where shorts are trampling over each other. A similar scenario where it just has such a smaller float, and those stocks are higher risk because they can move that quickly because you can rotate that float several times throughout the day versus a bigger cap. So know your own risk, profile, but it is a name I'm already in that I've been looking at. And I think it's interesting that we've got some upcoming catalysts where we really haven't seen that in this last year. And I think we'll see that, coming in to this whole next year where you have a lot more of these conferences. We finally had CES this year, which has always been a bigger uh, conference where these companies get to showcase some of the latest and greatest that they're working on technologically. Last year it was virtually. We're going to have a lot more interaction and participation this year, or virtual conferences, but they're going to be a lot more live and active. So we're going to hear a lot more from the individual companies as they highlight new products and want to make sure that investors are aware of where they're looking to go to grow their company.
Quickly,
Awesome. And Mel, one more time. Oh,
the
yeah.
CE event, she brought up CES. I just want to say it was a great event today. For anyone into tech or whatever, there was a great of cool announcements and stuff from Nvidia, AMD, Qualcomm, whatever. Definitely some good videos to check out into that.
I was just going to ask one more time, can you repeat the tickers? That'll be your picks for tonight.
Sure. LCID, NIO, and EH.
Perfect. Thank you so much, Mel. Mel is one of our favorites for diving in, as everybody just heard, to the dark pool, to the option flow. Obviously works for Black Box Stocks. So really good stuff there. Make sure that you're following her. Money Mel. Okay. Keeping it rolling. Danny, would you like to go next?
Sure can. Before I get into it, just want to preface this by saying that there was some news that came out, I think today, that there's a new variant, I think in Israel, I believe. I forget what it was called.
I saw France.
Yeah, well, there's two different ones. So I think the lady who was in Israel was pregnant, didn't even know she had, I think it was Omicron and the flu. And then the one in Europe is Omicron and Delta. Now, the lady in Israel wasn't too sick. Obviously, she wasn't symptomatic, but they said the one that's a cross between Omicron and Delta is definitely more problematic than Omicron. So just something to put out there. Don't know how that's going to go and where that's going to go, but I did say on, I don't know if it was the Spaces yesterday or earlier today, I couldn't remember, but the next 4 to 6 weeks are going to be volatile when it comes to COVID news. So just have to brace ourselves for just some volatility, and obviously we're starting already to see that. Not that has anything to do with COVID, but in any regard, talking about names, I love Lucid. I like where it's at. I have it in a wave 4 pullback. I think over 41.53. I think this can make a really, really big move. So I'm with you on that, Mel. It's got a beautiful setup. MACD crossover on the daily. Ttm Squeeze setting up on the daily as well. So I like it. I'll touch on Ford. We've been talking about Ford for a while now. Mel, I'm sure Mel could speak to this. The flow has just been insane over the last 6 weeks on Ford, so it's just been relentless. Beautiful setup. It had every marker that you would want to see on a breakout last week, and it did it this week. So really good move on that. But moving forward for this week into next week, I won't go over this, but earlier today, Pattern Profits, Ben at Pattern Profits called out FANG. I took a deeper look at the stock. Love the setup. It looks really, really good. Ticker is FANG. But as far as my names, I'll start off with, I'll do this in alphabetical order, so it's not in any order of importance, but FCX is a name that I've been talking about for a while, been waiting for that to break 40. It broke 40 last week. It's been holding in a flag right under my first target at 42.64. Room on our side to the upside. Squeeze is already fired, but plateauing. MACD already crossed over. So it might be closer to the end of its move than the beginning of its move, but it moves generally pretty slow. So I like this over 42.64. Again, that's FCX. Second ticker, caught this morning, is GS, Goldman Sachs. It was really the only play I was looking to take today. There was something else I was looking at. with Tesla, but obviously gave us that false breakout over 1200. But with Goldman Sachs, very similar to Nvidia last week. I was watching that nice psychological round number. Nvidia was 300 last week. Goldman Sachs was 400 today. We gapped up, obviously, but we held 400. Quick little back test, and we were off to the races. My targets were 406 and 410. Hit both targets. Exited the trade very near the top and rolled up with a little bit of profit. And I really like if we can hold here. Banks obviously kick off earnings season in a couple of weeks, so I'm really looking forward to seeing. Goldman Sachs made a big move, but that doesn't necessarily mean all of financials made a big move. So take a look at Morgan Stanley, take a look at J.P. Morgan. Take a look at the other names. Find what's lagging in the sector, and wait for that to have a favorable chart setup and buy the breakout. Next up is HD. HD, again, people are not going to stop building homes regardless of what's going on. So you're going to build a home, whether you're an individual builder or a contractor. You're going to need supplies, and you have basically two main choices. You have Home Depot and Lowe's, and Home Depot's had a really, really nice run this last year and a half. So we're flagging right under 416.50. We're in a massive broadening formation here on the daily. It pulled right back to that 55 EMA cloud bounce. We're flagging here. Watch it over 416.50. Going to semiconductors. It's probably closer to the top, but there still might be room here. Is TSM. I talked about this last week. Beautiful symmetrical wedge compression breakout with a breakaway gap. Gapped right over our 618 retracement today, stopped right at our 786 retracement at 135.01. If we can break 135.01, I like this up to previous highs, 142.46. RSI is starting to enter overbought territory, so that's why I was saying it might be a little closer to the top, short-term top, than it is closer to a bottom. So watch for a pullback, possibly to 129.16 or 618 retrace. Something that I haven't really heard anybody talking about, Ulta, beauty supply company. I have my fiance's cousin works for Ulta. Really good company. I like what they do. Their products are not going out of style. Plenty of room to run on RSI. We just broke out today. A little bit of a spinning top at 418.70, but I had a consolidation from August box breakout of 414.98 today. Looks really good. Upside targets are 431. Hold on one second. 452.04. Apologies while I'm saying this. I forgot to post the charts up at the top in the nest. So there you go. I just posted all of the charts. If you go to the link up on top, all the charts are in a thread underneath that main post. And the final one I'll talk about is XOM, XOM. So we were talking about financials and energy. That's exactly where my eyes are. Energy is breaking out. XOM had a beautiful RSI 50 breakout, had a 1-dot squeeze fire off today, had a MACD crossover, and stopped right at our previous highs. Very close to under 66.38. Watch for a 66.38 breakout. I have a fib cluster at 68.65, and then I'd be shooting for a price target of maybe 72, which puts us right at the top of our broadening formation. So that's pretty much what I'm looking at from an individual stock basis. But yeah, I think for me, my main eyes are going to be on financials with earnings coming up in a couple of weeks. So that's what I would watch. I mean, of course, there's individual names outside of the names that I spoke about, but every single ticker that I spoke about today ended the day green today. So what does that mean? It's relative strength. When the market was choppy and falling, all these names, they weren't just chopping sideways, they were actually going higher. And so that's relative strength. As a trader, that's my style of trading. That's what I look for. And so those are the names that I would recommend keeping an eye on.
Danny, these are really good looking charts, and also just love overall it's like an artwork to it, and I really like the Spaces watch list thing as the main post. If anybody hasn't checked this out, it's in the pin nest. Really really good looking post from Danny, and great quality on these charts. He's clearly outlined the zones that he's looking at. Danny, can you explain to people on this first one what the TTM fired means?
Absolutely. So the TTM squeeze, what it does is it measures two indicators. The first indicator are the Keltner channels, and the second indicator is the Bollinger Bands. And if you're on a chart and you put these two indicators on at the same time, what you'll notice is that when the Bollinger Bands go inside the Keltner channels, it creates this compression squeeze in price. And generally, what you'll see is a stock consolidating in that range. And what happens is there's a momentum indicator that goes along with the dots. And so when the momentum indicator is either slightly negative or positive, but especially when it's slightly negative going back up to the zero line and then goes above the zero line, you'll see me sometimes on my TTM indicator say slingshot squeeze. And what's happening is momentum was coming from the downside and moving up. And those red dots that you'll see on my chart, that's when the compression is on. And when the dots from red turn to green, that's when the squeeze actually fires. And what's interesting is the market makers don't price in the TTM squeeze as an indicator. And so generally when you get a squeeze firing or right before it fires, you get a premium expansion on options. And so as a day trader, I take full advantage of that, especially in the early morning on a 3 and 5 minute squeeze. I like to watch those squeeze setups on those earlier time frames, but even better when you have a multi-time frame squeeze setting up. So let's say you have a daily squeeze, a 30-minute squeeze, and a 5-minute squeeze. When the 5-minute squeeze fires off, it generally creates this cascading effect where then eventually the 30 fires off and then the daily fires off. And that's when you get these multi-day moves on some stocks. So it's more prevalent, the method I just explained, when you're in a trending market. But when you have a market that's kind of chopping sideways, I just look more for those individual squeezes firing off. And like I said, you can use this indicator on any time frame. I like to day trade and scalp with it on the lower time frames, like a 3 or a 5 minute. But I really love it from a swing trading perspective when you see it setting up on like a 4 hour, a daily, and especially a weekly. You can back test this and watch. Anytime you see that squeeze set up and fire, it's amazing, like the moves that you get off of it.
Awesome. Excited to be able to use that more, add that to the game. But everybody should definitely check those out. You'll get a lot of good ideas. Juicy, I see your hand up.
Hey, I was just seeing if I could go next. I do got to run another live stream right after this, but I
All
got
you.
all you. Thanks, man. Also, I want to go ahead and start you off like Danny. I searched for relative strength, and today was very choppy. And it's interesting to see ticker CAT. We have a symmetrical triangle break. We actually broke back above the 200 moving average. And I know people be like, "Whoa, that's not your usual type of thing," but hey, that's where the stream's at right now. Like I step outside the box sometimes. You got volume coming in, MACD flipping up, and relative volume on TrendSpider here, pointing to the high side. Next targets are going to be 22278, and if you clear that, you got pretty much room to the 236. Next one is going to be ticker GM. We had a lot of flow coming into this one too as well. Another symmetrical triangle breakout with huge volume on the actual breakout. I have an extension at the 72.10, but I also have a price target at 68.18. MACD also just flipped green here. I got to agree with Danny here in TSM. I do think there's room to go, and I have a high side trigger as soon as this chart loads up. All right, so I have a high side trigger of the high of day from January 20. 136.36. You clear that, you're pretty much going to see the all-time high. But I like to use TSM as the indicator for the actual semis. So the first one I'm going to be looking at is ticker MU. MU coming up on the all-time high breakout. You're bull flagging right here at the all-time high after a nice move, some consolidations with 96.92 is going to be your upside trigger. So if you clear that, you can pretty much get up to the 103 area. Next one's gonna be ticker Nvidia. And it's not time to buy it just yet. It's in a giant wedge. It hasn't broken out. But anything once we get above the 314, basically the number I have is 313.90. You have this MACD starting to drift to the upside. It hasn't flipped yet. But by the time we get to 313.90, you clear that, you got room to 323. Then we're going to go shoot for that all-time high at around that 347 area. Also got to agree with Danny on my last pick here is going to be ticker HD. Solely because we did go inside. We did have some slight algo flow. We have a flow convergence, what I call it. Basically, with that one, Let me give you the exact levels here. Hold on 1 second. Pull up on my TV. If price can clear, I'm looking for this as a day trade tomorrow too as well. So if price can clear to 413.62, I'll be looking for this to push to the 419.67 and short below the 408.20 for that move back down to 388. So those are just my top picks. But again, I still need everybody to heed a little bit of caution. The market's really not, the overall market is still choppy. So you really don't have too much of the market backing you. I know these names I went over, the names Danny went over have a lot of relative strength. But when you start to step outside these names, we have a very choppy environment. So I'm just going to go ahead and say, man, drop your position size a lot. Look to scale into trades. And if you are trading with your full size, be sure to scale out quicker. But besides that, that's it for me. I'm going to go ahead and head out. Again, Gav, this has been a pleasure. I love being on these spaces. This is one of my favorite spaces of the week. Be sure to follow everybody here. Like, I just want to say something. Like, when these guys do other spaces and I pop in, I listen to what they say. I very rarely listen to other people. I'm just saying. So, guys, do yourself a favor and follow everybody here. But I'm out, guys. Thanks for having me.
Yo, Juicy, right before you go, can you repeat those tickers for us just one more time?
100%. So it's going to be ticker CAT, GM, General Motors. Then there's TSM, which is the semis, and then MU, which is Micron, and then we have Nvidia, NVDA, and then last but not least, Home Depot, HD.
Perfect. Thank you so much. Take care, brother.
All right, man. Have a good one, guys.
Alrighty. Let's keep it going. Blake, you want to go next?
Yes, I would love to go next. What's going on? I love hearing everybody up here and their perspective and take on the market. And I really like it when I have confluence with my peers. So, Naz, I'm really happy that you're looking at energy and banks as well, because I know you like to focus on relative strength, same as me. So when I'm seeing that and I'm seeing my peers see the same thing, it makes me a little more have a little more conviction in my setup.